Hello and welcome to the OANDA Market Pulse Charting Analysis video. My name is Craig Erlam, Senior Market Analyst at OANDA. Today we'll start with WTI. We have seen some downward pressure once again. We did see a bit of a bounce earlier on, potentially just a dead cat bounce though, because following those the data this afternoon, the crude inventory numbers, we did see a strong sell-off with WTI falling from $31, you can see here on the 5-minute chart, back to $30 again and retesting that support level. This sell-off came following the weekly EIA crude inventory numbers. Now, they were actually below expectations or market expectations for this EIA number, which were created prior to yesterday. Now, the reason why that's significant is that yesterday we had the API estimate, or the API reading for inventory, and it showed a more than 3 million barrel drawdown in inventory. So that would be bullish for crude oil, because it means that the supply exceeded demand. It mean that demand exceeded supply in the last week. But in reality, we actually got a small build, which means that rather than seeing a 3 million decline, we saw about a 250,000 build, which again means that supplies once again exceeded demand. So we saw this dramatic sell-off immediately following the data, and we are seeing some consolidation, a bit of a retracement now. So we're back at around $30.50, but we have seen that $30 come under pressure once again. It'll be interesting to see if we see further downward pressure as the session progresses. Now, I just want to highlight here again, these $29.50 and $30 are key support here, and if we see these broken, then we'll possibly be looking back to $28 to $28.50. Alternatively, if we do see some upside building from this, then we could see a move back towards these $34 per barrel levels, if this is in fact a correction that we're seeing now, rather than either a dead cat bounce or some form of consolidation. Next is gold, and I wanted to highlight here is that we are seeing a bit of upward pressure once again in gold. Now, we did see a move having broken above 1090, 1100 last week on this risk aversion play. We have seen some selling pressure since so far this week. Now, we've pulled back towards this 1080 level, which I highlighted as being key in a previous video. The reason it's key: one, it's a previous level of support, it's also a previous level of resistance, but it's also the 50% retracement of the move from the December 3rd lows to the January 8th highs. And what we've seen is a pullback towards that 50 level. Again, this 55-day simple moving average, providing some support along the way. Now, I know the 55-day simple moving average as of late hasn't been that reliable, because we've been in a bit of a sideways market at times, and it tends to be less reliable than these sideways markets. But in trending markets, it is actually a quite useful indicator of support and resistance, especially when combined with other support and resistant indicators, which in this case it was. But you could see that in the 4-hour chart, I think it is, we did see an aggressive rebound off that 50 fib level. We first saw it tested and hold almost to the pip, then we saw a brief period of consolidation, indecision candle here, and then a very aggressive buying back towards these 1090 levels. So it'll be interesting to see if we can move back towards these highs that were hit at the end of last week, and if we can, then a move beyond here would be quite bullish for gold. And I think it may even suggest that we'll see a move back towards these 1180, 1190 levels again. If we zoom out, you can see that 1180, 1190 has been relatively important resistance over in October. Throughout October last time we were trading at these highs. So this could be interesting, especially if it combines with this longer term descending trend line, which we've highlighted here, which dates back to May of 2013. So it could be a very interesting level here. Now, on the way, we may see some resistance potentially forming around this 1142 to 1147 levels again throughout this period from March through to July of 2015. This was an important level of support, so we may see it provide some resistance along the way. But like I say, if we do see these 1114, these previous highs effectively broken, it would suggest to me that we're seeing a move back towards these 1180, 1190 levels in the medium term. Next is copper. Now, this isn't something we've talked about a while, but something I did want to highlight, because we have seen $2 broken, so we are trading now at multi-year lows, and we have fallen back towards 194.50 before finding some form of support. We're seeing some consolidation now, but once again, As with a few other things, this looks more like a consolidation to me really than a broader retracement. There isn't much appetite for the bullish move in this as with many other things. So this looks to me more like some form of consolidation, even if you use maybe this endpoint as here. Again, this just looks more like consolidation to me, a bit of a pennant formation here. So if we see a break below this the lower bound of this pennant or this rising trend line, that will suggest to me that we're going to see a continuation of the move back towards these 190 levels, which I've highlighted again on previous videos. So could be an interesting one here. Of course, if we see a move higher above the pennant, it may hint that there's more of a correction on the cards, at what point $2 would be the obvious next notable level of resistance, given its price support and it's a key psychological level as well. Dollar yen is continuing to push on higher despite initially finding resistance around these 118 levels. Now it's this region which is key for me, not just a particular level. It can be very difficult to find the exact level that a pair or a commodity is going to find support or resistance. I prefer to look, as you've probably noticed by now, I prefer to look at areas or regions. You can see here that this region here, 118 to 118.50, on numerous occasions throughout last year, was a very important area or region of support. So the fact that we've re-entered that region now, having recently broken below, this suggests me that this strikes me as a potential resistance region, at which point we could see a reversal back. So now that we're trading within this band, I will be looking for indications on these lower charts that we are going to see a move back to the downside. You could potentially be having a triple top here, so this could be that indication that we're looking for. We've seen roughly the same highs around 118.35. Got the same support here around 118. If we see this pull back and break through 118, that could be this could be a bearish indicator and may suggest that we are going to see a push back to the downside. Alternatively, if you add some trend lines to this chart, this could look like a rising wedge, which in a a rising wedge, regardless of trend, tends to be bearish. And as you can see here, this gives us an upper bound and a lower bound as well. Now you could draw your wedge how you want. You could have your end point here, you could have it just here. Either way, it's telling you the same thing. This looks like a rising wedge to me. So again, a break through that 118 level may spur the move below the rising wedge, at which point we would be looking for a move to open up potentially back again towards these 115.50 to 116 levels. So could be an interesting one to look out for in the next couple of days. Next, cable, we are still seeing this pair trade around these 143.50 to 144 levels. Now again, we do appear to be seeing some consolidation today. This potentially again is just another wedge formation, although it's difficult to really know for sure at this stage. So this is something I'll keep an eye on, because of course we've got this clear resistance here around 144.75, which has been touched on 2 occasions. This therefore could potentially, given the fact that we've seen a higher low, turn into a rising, an ascending triangle, which would actually be bullish. So I'd like to see more confirmation here. At the moment, there's no reason to believe that this is anything but consolidation, but of course we should keep an eye on the signs here. For example, we haven't made a new low today, and if this ends up as a hammer candle, then that could be an indication that we are going to see a move back towards these 147 to 148 levels, which again has been an important region in the past, coincides with that descending channel that it traded in previously, and would represent the retracement that this pair potentially is now lacking, having sold off so strongly over the past month or so. Again, a move back towards this 147 to 148 levels would actually represent a 38.2 to 50% retracement. So again, would fall in line with these key retracement levels. Finally, dollar CAD, and again, this is one we haven't highlighted recently, but we are trading above these 140 levels. We've pushed on towards 143. Now, the interesting thing with dollar CAD is you do tend to see some correlation with oil. Of course, they are a major oil exporter, so the fact that we've seen, you see that at 3:30 today when that inventory data came out, we saw a big sell-off in oil, and that was matched by weakening of the Canadian dollar as well, so the dollar rallied quite strongly against the CAD. So if you're anticipating weaker oil prices in the coming weeks, or in the coming days or weeks, then really you should be fairly bearish on the Canadian dollar as well, based on how the two have traded previously. Now, the notable levels of resistance I've highlighted here, we have to zoom back quite some time for to see, because once again with this we are trading at long-term highs here. We have to go all the way back here to April 2003 till we were last trading at these levels, and you can see at this time, if I just now take you all the way back here, these 147 to 140, well, to 150 region was a notable level of resistance, of support and resistance at this point when we broke below those 150 levels, and then we retested it and came back. So this could potentially be a notable region for resistance again, but I think ultimately we may be looking towards 150 in the medium term here. For more in-depth news and analysis, check out OANDA MarketPulse at marketpulse.com. You can also find out more about OANDA and sign up for a free demo account at oanda.com. Here you'll also get access to OANDA Forex Labs, which has a lot of great tools designed to help you in your trading.